This is your morning jolt, and yes, the stock market is still falling apart. But I got 3 stories you need to know to get your market day started right. First up is, in fact, the bull market still being blown to pieces. Futures are under pressure, no surprise there. I mean, look what happened overnight. Chinese stock market, bear market, defined as 20% off the all-time high. Eek. What else we got? We got President Xi Jinping in China saying he's going to punch back. He told a bunch of multinational CEOs that he's going to punch back on all the actions by the Trump administration. That's kind of disturbing. If you own shares in Nike, Starbucks, Walmart, all these companies that do big business in China, you have to be worried about hearing comments like that. What else we got? Even outside of that, we have breakdowns. We're having technical breakdowns in many hot areas in the market. One that we highlighted yesterday evening is the SOX index, the Philadelphia Semiconductor Index. I mean, this is one of the hottest spaces around, always looked at as a leading indicator in the market, but the fact that that is now below the 50-day moving average, I mean, I know it's a technical jargon, you really don't care, and you probably don't even know what it means, but it's very important. That might trigger more selling. I mean, look, you have Micron, Nvidia, AMD, all the hot SOX index, or the semiconductor index stocks, those have been the hottest names for over a year. To see them break down is a little disturbing. What else we got? Number 2, General Electric. I mean, the GE is set to leave the Dow today. I mean, they got the boot. It's almost as if S&P scared GE's CEO John Flannery to speed up his timeline on getting his breakup plan announced. That breakup plan hit today, and it's definitely a doozy. The stock isn't doing much, which is absolutely disturbing. But anyway, I mean, GE is going to try to extract or spin off their healthcare business. They are probably going to lay off a bunch of people in the attempt of saving $500 million, and they're going to invest their stake in Baker Hughes, oilfield services play. Again, I mean, this is long overdue. It needed to be done. GE just became too big to manage effectively to drive lots of profits. But like Jeff Hillman and Jack Welch are probably not feeling too good, and I'm just reading off here. But ultimately, this sets up a very confusing investment play on GE. You're going to have these earnings calls. They're going to look absolutely horrible because it still reflects the combined GE. But then you're going to have management, Flannery and CFO, pitching a breakup GE and what that might mean to the future of the company. All I saw is a company that's struggling mildly, and it's going to continue to struggle in the next couple of quarters, and it's going to revisit its dividend, or as they say, adjust. It's all about that management jargon. And last up, lesson of the day. A cheap stock is often cheap for a reason, and I mention that because Starbucks stock continues to be under pressure after its horrible news last week, where they warned on sales, and the overall sales continue to slow. They're going to close 150 stores. Stock's down about 7.2% over the past 5 days, and that comes despite Howard Schultz telling the Street's founder Jim Cramer that the stock is quote cheap and quote undervalued. Well, it's probably not cheap, and it's probably not undervalued here, at least in the eyes of the market, with sales slowing in the U.S., China, and ultimately also a lack of innovation at Starbucks. That's all I got for you. Be sure to sign up for the Morning Jolt newsletter down below. Back to these markets.